Hey everybody, welcome to accountinglecture.com. Today's topic is disposal of non-current asset. Disposal means when you sell your fixed assets. Okay, let's assume we have one computer, PC. We bought it some years ago, could be 2 years, 3 years, or even this year. Now we are selling it. If you sell it, it does not belong to you anymore, so thus it should not belong to the company's account. So your assets are going down. Any depreciation of that particular asset should go down, and by selling this asset, either you make a profit, happy you, or you make a loss. Okay, all right, now these are the stuffs we will do right here right now with an example. Okay, this is an example. It says Rachel Hall's financial year runs to 30th December. Okay, nice. On 1st January 2008, her accounts show she owns a car with an original cost of 12,000 and depreciation. These are the balance BD, like you have it already. This is asset and this is depre. Balance BD, you already have this value from before last few years. On 1st October, okay, January and October, a few months later, 2008, Rachel bought a new car. Okay, so he bought another car worth of 15. He had some car worth of 12,000. He bought new car, so more car coming in. Your assets going to be debit. Good. She traded in the old car and the part exchange. Well, traded in and the part exchange is the same thing. Like you exchange the old one worth of 12,000. You given it to the people who gave you new car, and the exchange value was 5,500. Three things going to happen. One, you are disposing the asset, so there you go, that this asset is no more, is going down again, and the depreciation of that going down. And the third one, either you sold at a profit or could be at a loss. These are the items what we are going to do. They said it's a 20% straight line, and there is a policy is to charge the full year's depreciation in the year of purchase but none in the year of sale. Basically this is only 1 year, that's why we're going to take only 1 year, but if it is over the 2 years, 3 years or 4 years, the year of disposal will not calculate any depreciation. That's the rule. They asked us the requirement for the year ended 31st December 2008. Got to do account, means T account for vehicle, okay, provision for depreciation, accumulated depreciation, disposal, and balance sheet extract. Let's do it now. Okay, let me draw the vehicle account. There you go, number A. Vehicle is a debit account, so anything makes it up on the debit side makes it down on the credit side. So we already had some balance BD, 12,000, but bear in mind, okay, this 1st of January you can write, but on October, doesn't he? Yeah, 1st of October 2008, we are selling the asset. So on the debit side you had the asset. How do you minus it? Just writing on the credit side, 12,000. You call it disposal. You don't have the asset now. You had the asset here, debit side. You don't have the asset now on the credit side because you've given it to those persons. You traded in, exchanged it, but by exchanging, you're having some new asset worth of 15,000. The old asset you exchange for 5,500. So you call it part exchange, 5,500. Why? Because your debit side will be up by 15,000. So 5,500 was exchanged for, and rest of the money you paid by check. Over here they told us. So vehicle debit, bank credit, that's why 9,000 500 is the difference. And that's it. You do balance CD/BD of this total account. Add. You get 27,000. That's the bigger side. We write both sides. Take away 12,000. 15,000 should be your balance CD. CD becomes your balance BD 15,000. That's my vehicle account. And okay, the second one, I've been told to do a provision for depreciation account, which is accumulated depreciation account. And let's do it here for B. Okay. Oops. Okay, provision for depreciation account is a credit account. All provisions are credit. So if you want to make it up on the credit side, make it down on the debit side. We'll start with the balance BD. Let me remind, this is only too much D. Only one account and one asset basically, which we had it, and that's the asset we sold now. So the opening value of our depreciation is over here. That's your provision for depreciation, which is 7,200. Balance BD. Did he not sell the asset? Yes, the answer is yes. We sold the asset. We disposed the asset. So on the writing on the debit side, we're making it vanish. It does not belong to the business anymore. Disposal. So over here, you need to write the income statement. A little bit of working you need to do. But the depreciation you're charging into the income statement as an expense. They told us at the top, 20% is straight line of depreciation for the year. On what figure you're going to do the 20%? On your this balance BD figure. Yeah, you have 15,000. Of that, you got to do 20%. And the answer is absolutely 3,000. That's what you got to write as an income statement. And there's no more information for that particular year. This is 2008. And 2008 you're doing. And you do total. You check which side is bigger. Clearly credit side is bigger. 10,200. 10,200. Take away 7,000. 3,000 should be your CD, which is balance CD. Becomes your balance BD. On the other side, 3,000. This is the second requirement. And bear in mind, as I told you before, that always there will be three requirements. One for the asset account itself, one for the provision for depreciation, and the final one for the disposal, whether you're making profit or loss or not. They said to us that we got to do an account, but let me quickly show you the workings, that how do you do the disposal, profit or loss on disposal. You normally start, okay, let's take this space, with cost of the asset less provision for debris or accumulated debris. You're supposed to get net book value, the worth of the asset, and then you compare with sale proceed, or this time it's part exchanged. Still you can call it sale proceed. Means how much you sold it for. The asset cost, I believe it's 12,000. Just double checking. Yes, it is 12,000. The top, it is said here, over here, it's 12,000. Okay, so the cost of the asset which we are selling is 12,000. The provision for debris is 7,200. Now you got to check what is the net book value. Calculating over here, 12,000 minus 7,200, 4,800 is my net book value. How much you sold it for or exchanged it for? It's 5,500, doesn't it? Just double checking again. Yes, it is 5,500. It looks like we've sold it at a profit. Fantastic, good job. And the profit of 700 profit. Where does it go? Into the income statement as an income right after gross profit. We are not meant to do here. It's not been asked, but just for your learning purpose. How do you show this information in a T account? You open a T account, you give it a name, disposal account. I'd rather refer it as a debit account. Anything up on the debit side, minus on the credit side. So it started with the cost. So machine account or machine 12,000. Then minus provision for depre on the credit side, PFD. You do write in detail. You assume net book value is 4,800. Then you compare the sale proceed. Sale proceed was 5,500. Now you got to check the balancing figure. Although we know the 700 is a profit, if it is a profit, it should be on the debit side. If it is a loss, it should be on the credit side. Now, just checking the balancing figure, which is 7,200 plus 5,500. It gives you 12,700. That's the biggest side. You're writing it 12,700. Take away the 12,000. You're left with 700. That goes into the income statement as a profit. Okay. And last requirement, you meant to do balance sheet extract. Means how do you show into the balance sheet? Okay, to do that I need to erase my whiteboard, make it clean and clear. Just bear with me. In a second I'm going to do it. Okay, my board is much clear. In the last one, the balance sheet extract or SOFP, statement of financial position, you do 3 columns, don't you? Cost, less provision for depre or accumulated depre, get net book value. Now, you know, we sold the old asset. Sold asset should not be in your balance sheet at all. And these 3 items goes into the non-current asset, doesn't it? Yeah. But those 12,000 is gone. This 15,000 came in. Yeah, right. That's what you're gonna write in your balance sheet. Oh, it's a vehicle account, doesn't it? Yeah, vehicle. Or saying it's a machine. It's not a machine account. Well, a vehicle account. You write 15,000. That's provision for depre. You can go back up the video. It is 3,000 and net book value is 12,000. These two double underline. It goes on. That's how you do it. All right, folks. Hope it helps. If you like the video, please watch it and share it with your friends. Thanks for watching again.